Holy cow, the housing market in California has changed so much over the past several years. But there's a lot of misconceptions about what's happening right now. So I'm going to share the latest trends we have right now from the California Association of Realtors regarding home prices, housing inventory, home sales, and price reductions, and of course, much more as well. I'm going to share what's actually happening based on data versus speculation and my feelings. So let's go ahead and dive right in. If you guys are new here, please subscribe. I post frequent, as much as I can, housing market updates nationwide, but also in California as well. And if you guys want to learn more about the Sacramento market, I have a separate YouTube channel that's Sacramento Home Goals. Anyways, thank you so much for joining me in today's video. I appreciate it. Let's begin. So again, this is from the California Association of Realtors. They do I would say, an amazing job sharing a lot of trends, what's happening in California at the regional level and county level. I'll post a county level video in about a week. This video is going to talk about the state as a whole. Every market's different though, right? We're also talking about existing home sales. This excludes brand new home construction and also excludes multifamily units as well. So let's talk about this. This is kind of a snapshot. I'm going to share some additional details regarding what's happening here. So home sales in California for the month of August. I know this is October, but it takes them about 3 to 4 weeks to post their data. So I'm going to share the latest trends from them, which was for August. So home sales are basically flat from a year ago, which is pretty astonishing given the fact that on a national level, we had the lowest level of transactions since 1995. And we'll probably be at a 30-year low once we reach year end here. So anyways, we have a lack of home sales in California. Our median sale price, this means that half of the houses in August sold above this amount and half sold below that amount, was $899,000, which is more than twice as high compared to the national average in the state, in the US. So prices are up by 1.2% year over year. The unsold inventory index is at 3.9 months. I'll share some historical trends regarding that because that is, historically speaking, elevated, and that is up by nearly 22% from August of 24. Days in the market is at 31 days, a big increase, I should say a big percentage increase, up by nearly 41%, but the actual number is actually pretty small. All right, let's talk about sales, and then we'll go over home prices, and I'm gonna share how prices have changed compared to years past, going back to 2010. This video I've been making for you guys for, 5 years now, every single month. So anyways, looking at sales in California, it was only down by 0.2%, yet it did rebound compared to July. It rose by 0.9%. Just taking a step back though, even though transactions rose compared to the previous month, this graph really tells it all. We basically had more or less 3 years of a very low level of transactions in California, which is very common for the state or the nation as a whole, because we should be seeing around 400,000 transactions each month, which of course is analyzed, but the level of transactions is way below pre-COVID levels. They also provided this as well. This is the percent change of home sales by price segment. The only price tiers that saw a gain, and a very small gain at best here, was sales over $2 million rose by 3%. In the range of $300,000 to $399,000, it rose by 2%. But all these other price tiers decreased. And in fact, the biggest decline was down by 7% in the range of $500,000 to $749,000. And this, by the way, is quite a bit different compared to what about 3 years ago, where we saw a giant increase of multi-million-dollar properties selling. And that, in my opinion, was kind of skewing the overall percent change in the median sold price in California, because we saw a high mix or a high level of transactions at the upper end of the market and a low level of transactions at the lower end. And now, transactions for virtually all these price segments has been virtually flat year over year. So in other words, we're not seeing like this giant increase of multi-million-dollar properties selling, which could skew the overall prices statewide. Now here's a change happening as well, and I believe this has to do with the fact that mortgage rates have been decreasing. Average mortgage rates, of course, they fluctuate every single day, but they're more or less on the lowest level since about October last year. And this is, in my opinion, I know you guys want to see home prices fall, but when rates fall greatly, overall that can increase home sales. So because of rates decreasing a little bit in July and August, we saw a small bump, I mean barely, up by 0.2%. But that is actually the first positive reading compared to the previous 12 months in about 6 months. So in other words, the decrease in mortgage rates is causing a increase of pending home sales, but barely, only up by 0.2%. So I will say that housing affordability is still a big issue, which is one of the main reasons why we're seeing kind of a lack of transactions in California, and of course, I keep on saying statewide, also nationwide as well. All right, let's talk about prices. I have so much to share regarding this. It says here, California's median home price bounced back. Rose by 1.7% compared to July and up by 1.2% year over year. Now, this doesn't really tell us a whole lot though, right? So I want to share my own analysis of their data. I've been sharing my spreadsheet here with you guys for years now. So I actually pulled these two columns from their website. Everything else is based on my own nerdy analysis. And again, we're only talking about existing single family detached houses, excluding condos, new home construction, and excluding multifamily as well. So we're just shy of $900,000. And it's right to say that prices bounced back in August after falling to a 5-month low in July. So in July, we're at $884,000. Now we're at $899,000, up by 1.2% from August of 2024, which, by the way, is the first year-over-year increase since April this year, because May, June, and July, we're in negative territory. Now we're back in positive territory due to the fact that prices rose from July. Before I share that with you guys though, even though prices did increase compared to 12 months ago, the rise up by 1.2% pales in comparison to what we should be seeing this time of year. The average year-over-year change, based on my nerdy formula there, is a gain of 8%. So August to August, every single year since the year of 2010 was a gain of 8%. This year, up by 1.2%. So even though prices rose, it really pales in comparison to what we should be seeing this time of year. Now, speaking of that, even though that does pale in comparison, what was actually normal was the percent increase compared to July. It rose by 1.7% compared to the average July to August change each and every year since 2010 is an increase up by 2%. This year rose by 1.7%. Here's what I also did for you guys as well. I wanted to look at how's this 1.2% change from last year. How's it compared to the crash during the Great Recession? Back then, this is of course, the fallout of the housing market and our economy in general. From August 07 through August of 2008, we saw a giant decrease down by 40% in one single year. Now we're up by 1.2%. Also stay tuned here in a little bit because I'm going to share one of the main reasons why we're not seeing a sharp correction right now compared to 2008. And, spoiler alert, this has to do with supply versus demand. Speaking of that, I actually looked at this as well. Looking at the percent change in home prices since pre-COVID back in August 2019, up a staggering 46%. All right, going back to this slideshow, let's look at the sale price to list price ratio. That was at 98.3%. This means for August, on average, houses that did sell, they sold for 1.7 percentage points less than the seller's asking price. That's down slightly from last month and down slightly from 1 year ago. And that ratio, by the way, is the lowest in about 2 years. So therefore, buyers gain some leverage from sellers right now. This also speaks to that as well. This is the share of houses that sold above the seller's asking price actually decreased to a 30-month low. That was at 29%, which means for August, about 1/3 of all homes that did sell, they sold for over the seller's asking price. In contrast, this means that 2/3 sold at or below the seller's asking price. Moving in the direction of a buyer's market, I would also argue that some markets in California are probably already a buyer's market. And a really good snapshot or good comparison here is when it was a very strong seller's market. Back then in April of 2022, about 3 out of every 4 houses that sold over the seller's asking price. Now it's basically the reversal of that, selling for at or below the seller's asking price. We're also below last year at this time as well. In August 24, we're at 40%. One thing I actually want to add here as well is that at 29%, this is more or less on par with what we saw back in August of 2019. That ratio was around 30% as well. So of course, the market has definitely slowed compared to the past several years, but it's more or less on par with what we saw back in 2019. Let's also discuss inventory levels based on the month supply. And here's one of the, a really good graphic to show how different this year and in years past, houses compared to the Great Recession when we saw that fallout in home prices down by 40%. So back then, the month supply was reaching or very close to a 17-month supply, which is absolutely insane given the fact that right now we're at 3.9 months. As you guys can see right here, ever since really late 2021, we've been kind of seeing this kind of slow progression upwards. So we're actually higher compared to pre-COVID levels, but we're not skyrocketing like the run-up of the Great Recession. Let's have a look at how this all compares to years past, though, because looking at year-over-year figures and that chart is kind of hard to read in my opinion. So August of this year, the month supply begins at 3.9 months. Actually look back through years past at 3.9 months. That's the highest for the month of August since August of 2014. Back then we had a 4.0 month supply. Also compared to 2019 this time, we had a 3.2 month supply. And also the average August since August of 2010 is a 3.3 month supply. So the month supply right now is higher compared to pre-COVID, but also compared to the long-term averages as well. Yet it pales in comparison to January of 2008, which was the peak. We had a 16.6 month supply. On the other end of the spectrum though, it pales in comparison to the all-time record low that was set back in December of 2021, when the month supply was only 1.2 months. My biggest takeaway regarding this is that part of the reason why this is remaining very much elevated is due to the fact that home sales are at very low levels. So sales are low from sellers with ultra low interest rates deciding to not list their homes for sale, or if they're not getting the right price, just delisting. It's also due to that sales being low because of sellers not selling their houses, but also low due to housing affordability constraints for home buyers right now. And here's actually the formula for the month supply. It's active listings, and then divided by that is the average number of homes for sale. So we have a low level of transactions or home sales that actually increases the month supply. Part of the reason why why we have elevated levels right now. So going back to the slideshow, looking at active listings slipped for the first time since December of 2024. To me, this is kind of a nothing burger, because normally inventory tends to peak in the late summer months. It tends to peak around July, August, September-ish. And here we are in August, and of course the months, or not the month supply, active listings or inventory levels actually decrease. Entirely normal, a seasonal change that we tend to see each and every year. So like I mentioned here, inventory normally peaks in late summer. The more relevant headline, in my opinion, is that inventory is higher this time of the year compared to the past several years. As you can see here, since 2020, inventory has been very, very low. Right now, we're at elevated levels. However, though, it's still lower than the same time frame in 2018 and 2019. They don't give us actual numbers here, but just kind of eyeballing this, August 18, August 2019, around 55,000 to 60,000 homes for sale, and now we have less than 50,000. So even though we're lower compared to pre-COVID, it's great to see that inventory is higher compared to the past several years. Of course, giving home buyers more options. And of course, you can get a home, you can buy a home for less than a seller's asking price, ask for closing credits, your realtor's commission, etc. Much different market compared to 22, 21, where you had to write offers way over asking, waiving contingencies, etc. A very challenging market to say the least. Now, here's something that I hope you guys are still watching today's video, by the way, because this here really tells me that the market is not crashing because inventory, or the percent increase of inventory, is actually going down. So it's actually decelerating. And this has been a common trend for 1, 2, 3, at least 4 months now. So we have 23.5% more houses for sale in California compared to August of 2024. However, as a note right there, that's the smallest year-over-year gain since approximately March of 2024, which is right about there. Therefore, even though inventory is up by more than 20% right now, that's quite the improvement, or the deceleration, from the over 40% gains we saw to start the year. My guess why these gains are actually losing momentum is due to the fact that a lot of home sellers are listing their houses for sale. If they don't get their home price that they're looking for, they just delist their houses. So we're seeing a lot more delistings right now, which is causing inventory levels to actually decrease as well, or the gains to actually lose momentum, I should say. Okay, before we talk about the share of price reductions, how that compares to the nation as a whole, here's a look at how fast or how slow houses are selling. So this is days in the market, that's 31 days. The time frame when a homeowner, they list their home for sale, it's for sale right now, they accept an offer in about 31 days. Compared to 22 days 1 year ago. Therefore, it took an extra 9 days on average to sell a home this August compared to last year. In regards to the share of price reductions, that's out about 42% right now. So about 4 out of every 10 houses for sale have reduced their asking price. That is more or less in line with pre-COVID levels. We should be seeing around 35 to 40%. So I should say really that right now, we're slightly above historical trends this August. Speaking of that, here's a look at altosresearch.com, looking at the share of properties with a price drop nationwide first, then we'll talk about California. So nationwide, we're at about 42%, a little bit higher compared to a year ago, higher than 2 years ago, and also more or less on par with what we saw back in 2022. Looking at California though, look at that big increase there. In California though, we're at approximately 36% higher, a little bit higher than last year, a little bit higher compared to 2 years ago, but way lower compared to the peak back in 2022. Back then, the share was at 42%, and right now we're at 36%. So the share of price reductions is actually a little bit better in California compared to the national average as well. With that said, if you guys are looking for a real estate agent referral in California, then please check out my website, which is realestateteamfinder.com. And of course, if you guys want to learn about the Sacramento housing market, Sacramento neighborhood tours, check out my second YouTube channel, which is Sacramento Home Goals. With that said, I appreciate you guys for watching today's video. Please like and subscribe, and we'll see you in the next one. Thank you very much.